Cloud.
Welcome,
Hart Investment Group Weekly Roundup, October 14th, 2022. I'm Ben. You're Ben. I'm Scott.
Last time I checked.
Yeah, I know. Oh, man. So here we are at the end of the week, mid-month. Let me just start out by my weekly headline reading. The end of the week. Dow closes 400 points lower to end a wild week of trading. Was it a wild week of trading?
As per usual, I think this year, yeah. Well, I guess we had a 5% rally this week, followed by a correction into the close here. Like Nasdaq, I think down 3% today, but up 5 yesterday. So 2022 is the year of volatility. I think I need a tattoo right next to your Iron Man tattoo. A little volatility tattoo.
That's it, eh? Just one big spike.
That's it.
Wild. It sounds like you got a cold there, Mr. Ben.
Yeah.
You're fighting something, eh?
Yep. Worn down.
Market's keeping you up at night. Yeah. Market's keeping you up at night.
Yeah. Actually had a few calls today. Clients were asking how I was doing. So yeah, it's been a grinding year in the markets.
Yeah, for sure.
Yep.
Okay, so what? Give us some feedback here. What did you see this week, and what do we get up to?
So Wednesday was a CPI report that was, it's one of these things where bad news is good news, maybe. So the CPI number came in.
That made no sense, but okay.
Yeah, I know.
It's supposed to get it.
Made no sense. Let me walk it backwards. The consumer price index number was hotter than expected, which made people believe that Powell would ease off sooner or pivot. And as I said in one of my dailies, I don't want to use that word pivot anymore. It sounds just ugly. But so I think that's why we saw the rally after Wednesday, Thursday, with the view that people thought that Powell is going to change directions maybe sooner than expected. Lots of stuff in research this week. Hedgeye had their investment summit, which they do. Typically, I think they do it once a year at this time, but they had 9. They always have eclectic speakers, so they had Hugh Henry kind of lead it off. And if you followed Hugh's stuff, he's a former hedge fund manager, and kind of a strange thinking philosophy was quite good. But then they wrapped it up with Danielle DiMartino Booth, who is a former Fed insider. So she was with the FOMC during 2008, 2009 crisis. So she had some interesting views and points. So there's a lot of research that came out this week, and the UK pension issue continues to be a pretty material one, which I'll cover. 3 of the 4 slides I'm doing today, we'll go through on that, but that seems like it could be a systemic risk at this point. So we'll cover that a little bit. So lots different things: inflation, central banks, currencies, lots of different things happen this week.
Anything happen in the portfolios, or pretty much standing pat?
Pretty much standing pat, starting to buy a little bit here and there, doing some tax loss selling and buying back some things. But I still think the names that we've talked about, I still think have the as good a risk reward as we've seen in a very long time. On Tuesday, I believe this week, we saw some of the big tech names hit 52-week lows, which I still very much believe in, where I think Meta and Shopify and Intel and some of these businesses can go over the next couple of years. And so those names continue to look super attractive, but haven't really gone crazy aggressive. And a lot of that has to do with just that there's a lot of things cropping up with this volatility that we've seen this year that have caused me to just say wait, which is really hard to do, but have been generally waiting.
Got it.
Yeah.
Okay. Well, you clear your sinuses there. What are the charts look like for today?
All right, let's get them going. Had quite a few questions around the UK pension issue, and so I will do my best to kind of go through that and why it is kind of why it's an issue, why it was an issue in the UK, and as per Eric's question last week, can this roll over into other countries? And so I'll try to hit off a little bit of that, but it's one of these things that over the years, as I've gone through the crises of 2001 and 2000, 2001, 2008, 2015, 2011, there's always something different in the system that comes under pressure, and it tends to be as a result of decisions that are made from previous crisis that causes that to roll over into other ones. So this is just a quick look at OECD pension fund assets. So this is Q1 of last year because that's as updated as the data is, but that 34.7 is trillion. $34.7 trillion in pensions. And so, if there is a risk in the pension system, this is a massive risk that we need to stand up and pay attention to. So that's why it is causing so much angst and attention right now. Is it's an enormous asset class.
Gotcha. That's a good one.
Mhm. So then just a little bit about what's happened so far in the UK is as a little bit about pensions, right? Is they have future liabilities that they have to provide protection against. So their future liabilities tend to be 20 to 30 years into the future. So one of the things that happened over the last 10 years is that we had zero to negative interest rates. And of course, to kind of have a benefit of, I'd say kind of what do we do to earn the yields necessary to get us to our actuarial goals, which is how pensions think about things. And so interest rates are at zero. So the bankers came up with a great idea on how they were going to generate safe returns in a low interest rate environment. And so they created these swaps essentially that they didn't have to put up assets for. They did put up some collateral, but it was margin collateral. So they were able to take massive leverage. And what they got back was a decent interest rate and the ability to invest some of those proceeds into higher yielding either corporate bonds or dividends or things like that. And so what we saw happen as the picture here is you saw bonds starting to sell off is what happened is those swaps started to get into trouble. And so where most of these pensions, what they did is they started selling and liquidating their bonds. And so this is a view of the 30-year bond this past little while going down roughly 50% overnight. And so the reason this is a concern is because the Bank of England has stepped in. They said we're going to support you, but only for a short period of time. And so what has transpired now is the pensions of UK are in a position now where they have to come up with some kind of liquidity, and so this could roll over into other places, but this was a potentially a systemic risk that we need to pay attention to.
Wow. Yeah.
Yeah. So it's complicated, and as I say, as when I was getting ready for this, and we've talked about this the last couple of weeks, is as we get into these different events, every time you learn of the other wrinkles and risks that have been put in place by long years of making bad choices, which was zero interest rates without hedging the potential risk for a rate increase, and that's what we've seen here. And so right now, this is a look at the what potential other countries may have similar types of risks. And so if we look at the UK right here down along the bottom, their pension liabilities are 118% of GDP. And so immediately you go to look at Canada here. So Canada's pension liabilities are 95.5% of GDP. And so as I've followed this with Macro Alf and some of the others that have commented on these that I've followed, this is a reasonable gauge. The lower the percentage of pensions to GDP tends to be the lower systemic risk. So interesting way to look at kind of the breakdown of what countries could potentially come under further pressure that we'll continue to monitor and pay attention to.
Right. Very good.
The last one, I'd say probably leave this on a high note. At least I think it's on a high note.
That's nice. Nice for a change.
Yeah, it's always high notes and looking forward. But one of the things that I don't know if I've commented on the weekly or at least in the daily is one of the things you're looking for is you can't find the bottom of markets. But one of the things you're looking for is when volume starts to pick up into down markets. And so we're starting to see the volume is starting to pick up a little bit now. And what's which this is one singular signal that we pay attention to. It's starting to say, these pensions are starting to be active in the market. Hedge, I commented today that hedge funds are facing somewhere in the neighborhood of $200 billion of redemptions in the last quarter of this year. So, these are things that are saying we're starting to capitulate, which has kept me a little bit patient. But this is a positive sign that we're starting to see volumes come into higher levels at this point.
Yeah, it's a good sign for sure.
Yeah.
Okay, that's it, eh? Short one.
That's it. Yeah, that's it.
Okay. Normally have more than that. That's good. Well,
Yeah.
we started
Yeah,
off the charts with with a 3-slide maximum.
Yes.
I don't think we've ever hit that.
Yeah. Maybe the
Okay.
first 2 weeks.
Yeah, exactly. All right. So just roll on here. Looking ahead to next week. What are we looking at?
So we are getting towards the Bank of Canada. They have a rate announcement on the 26th, so that's not next week, but the following week. So we'll see. We'll have lots to continue to pay attention to, but volatility continues to be that one thing that's still way outstanding. We look at like volatility on bonds is extremely high. Volatility in the oil market extremely high, and so will be interesting to watch to see if the volatility starts to come in and or we get that capitulation that we've been talking about. So be lots to pay attention there. At least from Canada's perspective, this is the last month of the fiscal year for all the banks. So that'll be worth watching, pay attention to, see if anything's going on there, changes. We've mentioned before that HSBC is potentially selling their Canadian division. So you may get some announcements into the end of the quarter here. So we'd be watching that. Wouldn't be material necessarily on the acquiring stock, but there'll be news that will be worth watching, and continue to follow the data every day.
Awesome.
Yeah.
Awesome. Well, sounds like you're gonna have a busy weekend of taking care of that cold. Maybe put a nice maize poultice on it or something, on your forehead or something.
Yeah. Don't have time for that. Drink lots of water.
Draw out that virus. It's a nice maize poultice. Okay. Well, I think that's it. No questions today, and we're going to kick the weekend off here.
That sounds good. All right.
Okay, everybody, have a great weekend.
Have a great weekend. Thanks. Take care. Bye.